Hey guys, Boris, welcome to the technical analysis of the crosses for December 19th to 23rd of 2016. And I think the story in the crosses this week, of course, is the relative weakness of the commodity dollars going into Friday's trade and now coming into the fresh new week. That very much needs to be noticed. My favorite ideas on the crosses side really deal with the euro bouncing and the commodity crosses actually trading very weak on a relative basis, either against the euro or even against dollar yen, if we get a correction in dollar yen. So of the three commodity crosses that I have in mind, here are my ideas for next week. I like going long euro pound again because I think cable looks to be relatively weak, because that 83 level is a very hardcore support for euro pound. If that goes, it goes, but you're very close to the support level, so your risk is very, very small, and a bounce here to 85 could very much be possible. It's basically the idea, the trade here is that the short covering in the euro is going to be stronger than the short covering in the pound, and that should drive euro pound higher. Euro Kiwi did a massive breakout on Friday, and therefore has a very strong possibility now to target towards 152. Again, this is a trade of, well, if euro starts to do a little bit of a short covering trade, I think Kiwi does not catch up, and that provides euro with a lot of impetus on the euro Kiwi side. And then last but not least, a huge flame out on the Kiwi yen to the downside that could be sending us a turn signal against the 84 stop in the euro in the Kiwi yen. So let's just take a look at the charts here, and let me show you what I mean all across the spectrum. Oops, let me just get up to my charts here. Sorry. Okay, here we go. So here are the charts, and let's start with my original thought, which is the euro pound chart. So the reason why I'm sort of bullish, and this is a weekly chart, 3-year chart, is that you can see that the 83 is a very, very clear support level on the euro pound. As I said, there is no real data here, so we're basically just trading the idea of support and resistance. 82.50 is sort of the breakdown support. So really, a break below 82.50, you're wrong. If anywhere above 82.50, if this holds, we have a chance for a bounce back up towards the 85s on the euro pound. Still like that trade, still like that as a turn trade. Euro Kiwi was a very, very clear definitive breakout here. This is a weekly chart. You can see that on the weeklies. It did a big break off the 142s. If you go on the dailies, it becomes even more evident just on a basis. So you consolidated around the 48s, and you took a big move towards the 50s, and now you really have the 52 as the reach here to the upside. So 48 would be the support. I guess 47.50 would be the support here on the euro Kiwi, and 52 would be the target. And then the last, and this is an interesting chart, I think, and I need to go on this is the daily. You can see that on the daily, big turn here on the daily, a signal that shows you that you pause and then a big breakdown. And if you get the yen correction, this is really basically a bet on the yen correction. To me, the yen correction will be strongest against the Kiwi, because Kiwi is just not going to keep up. And you have a potential here all the way down to a 79 distribution. But if you look at this on the weekly charts, let's go on the weekly charts, you really can see the flame out on the weekly charts. It's a pretty strong signal that we've made a turn. That you could have a couple hundred points against you, because that is a pretty big run to the top. But unless it takes out 84s, the trade really signals a potential turn here and the distribution all the way to 79. This could be potentially maybe a 2-week trade, but I really like the yen correction trade against the Kiwi as my strongest idea going into the new year on a technical basis. Fundamentally, we don't have that much data to support us, and the trigger in the yen could be that the BOJ could just comes in and a little bit hawkish than everybody thinks it is. They're not going to expand their QE as much because they don't need to, and that could create a distribution in dollar yen, a flow out of dollar yen, which could then trigger the whole Kiwi yen complex all the way down to the 79 price. So that's how the week shapes up. Those are my best ideas on the crosses. I wish you guys the best of luck, the best of trading, and happy holidays. I'll see you guys later. Take care. Boris.